On Friday, the United States declared a public health emergency on coronavirus. For U.S. citizens coming from Hubei Provence, they will be placed in quarantine centers around the country for up to 14 days. So after months of cool, calm, and collected risk-on strategies, January saw failed buy and dip strategies which faltered across every asset class. So how bad was January? U.S. stocks had their worst start to a year since 2016. As Brexit arrives, UK stocks had their worst start to a year since 2014. We had the biggest January jump in VIX since 2014. Treasury yields had their biggest January drop since 2015. The yield curve flattened second most in 4 years. Copper had the worst start to a year since 2015. Texas light sweet oil had the worst start to a year since 1991. Gold's best start to a year since 2017. Chinese markets have been shut all week, but judging by their futures, the Shanghai Composite is set to open down 350 points, or about a 12% drop. So, as the S&P 500, the Dow Industrials, the Dow Transports, and the Russell 2000 suffered their biggest daily drop since August, things could have been worse. Amazon saved the Nasdaq and the S&P 500 from being totally ugly, and IBM saved the Dow from being worse than it is. With stocks and industrial commodities plunging, the rates market panicked and started to price in almost 2 rate cuts in 2020. Wall Street is using the red phone to make a hotline call to Fed Chair Jay Powell and are asking to be saved once again. What a difference 1 week can make. So, let's take a look. So we're going to go where all the action is, and that's in the daily chart. I'm going 1 year out to give you some better context here. So again, this is the 1 year daily on the spiders, S&P 500, the SPY, the close on Friday, 321.73. That was down 5.95 or 1.82%, a pretty big drop. Now, simply looking here, again, the context that we want to see here is what happened in these drops from this peak to this trough, peak to the trough, peak, trough, and now a peak. I'm thinking this is just another garden variety correction, similar to these three here. So if that's the case, I would imagine we're going to drop below the 50 EMA. I'm not sure how far down, but maybe we go down to say 310. That's my point, at least right now. And you can see the continuation here in the MAC. The fast line peaked there and headed down pretty hard. It's still accelerating on the downside. Certainly, it did that today. So no signs of a slowdown yet. But we'll wait and see because we're still above zero. We have some strength. And judging by these other drops down here, here, and here, I would imagine we're going to drop down below zero, hopefully stay somewhere around that -2. And if that's the case, then it will be probably just a garden variety correction. Moving down here into the MAC histogram, certainly we looked pretty good there, but then all of a sudden, boom, the floor fell out. Here into the price rate of change, same thing. Moving on down into the RSI, we're at a very weak 34.34. Now, what's interesting here is the drop today only brought us back down to where the drop was just a few days ago. Now, I don't think that's going to hold, especially if there is some continued selling into next week, which I think the probabilities tell us that's what's going to happen. At least that's what the stochastics say, is there's no stopping yet. We're still on an elevator ride down. Hopefully, we'll stop somewhere around that 20 line as we did here. We stopped short there, but we overshot here. So I'm going to cut the 2 in half and say, hey, we stop here at about 20. That's my prediction, at least for now. Volume kicked up, not unexpected. And then the Williams all the way down here into the oversold territory, but that can stay down here for a while. It hasn't hit negative 100, it's at negative 91.82, so there's still room for it to fall farther. Is that going to happen? I don't know, but I think what's going to happen is we're just going to have some continued softness until things do firm up, back up to the price chart. So there you go. That's what I see is something along the lines of these three previous drawdowns. I don't see anything worse yet. No matter what the headlines say, it's not showing up in the charts yet. It may. Things may change. But at least for now, I think it's a garden variety correction. But if you have some dry powder, it might be an opportunity when we bottom. But we'll know here in another week or so. At least we'll know more in another week or so. The probabilities are that into next week there will be some more selling. So just be patient and prudent. Keep some dry powder. And for today, that's ChewDog Charts. Thank you.